Hi, my name is Ainabila. I'm excited to introduce Candle which Ahmad and Taniga start in spring 2020. The goal was to create unique pillow candle that bring joy using natural oil and bee wax. This sustainable approach support bee population and ensure eco-friendly product. Our candle are handcrafted from bee wax and infused with essential oil, offering delightful scent like lavender and citrus. They burn clearly and last long, making them perfect for a cozy home or as a gift. We began with initial investment of 150,000, investing profit to grow. Can the be start with just the two of us, but now we have a team of 4 dedicated members handling production and sales. Currently, we operate on one workshop, but we plan to expand in the future. Canterbury is a statement to our passion and commitment to quality sustainability.
Next, for industry analysis, we are going to explore some market overview, customer analysis, and product selection. According to STAT, candle business is expected to generate 53.78 million in sales with an annual growth rate 3.45% from 2024 to 2029 in Malaysia. The main factor for this expected growth is Malaysian tradition and their attraction towards scented candles as it embraces their cultural heritage. As per customer analysis, 65% of buyers are females and 46% of them just buy for their aromatic reason. Moreover, as we mentioned earlier, scented candles are highly demanded, especially for celebration, festivals, and home decor purpose too. So, based on this study, we decided to launch our product in pillar type as it provides stronger scent experience due to their larger surface area and material we choose to produce our product in beeswax.
So next is marketing. So we use 4P for our marketing, which is product, price, places, and promotion. So first for our product, we use a premium beeswax and scented oil for our scented candle, and we also handcrafted it by hand. So which is all natural and safe because we use a premium and natural ingredient for our scented candles. So next is price. So our scented candle range from RM 80 ringgit to 140 ringgit, and the reason is because it's more expensive because we use a premium ingredients, and we also handcrafted it by hand. That's why it's expensive. So it's some things that balance between luxury and sustainability. And next is places. We intended to sell it in like Hoga, Kaizen, Daiso, or Body Shop. And also we also have our own online platform, which is like Shopee, Lazada. And last but not least is promotion. So for our promotion, we are intended to do a promote by like using Instagram or TikTok, and we also like intended to like do a recording like behind the scene and post it in YouTube about like how we are doing the scented candle. And we also intended to do promotion by doing a collaboration and partnership with like Google AdSense or YouTube AdSense. And so for marketing, we think that like the key point here is that we are using handcrafted luxury and eco-friendly, and also we are selling using a premium pricings.
Hello, my name is Nzamai Zara Betty Zambi and my metric number is 221-220-779. I would like to be presenting my part, which is capital allocation. Capital allocation is the strategic allocation of business financial resources across various initiatives to maximize returns and achieve strategic objective. It involves budgeting, which quantifies available finance and allocates resources to various departments like marketing, R&D, operation, and expansion. Performance monitoring and risk management are crucial for effective capital deployment and financial stability, ensuring that business invests in diverse markets and projects to distribute risk and prevent over-reliance. Next part is capital contribution. The capital contribution table for Candle B Company shows that each shareholder contribute a different amount expressed as a percentage. Akmal, the original founders, contribute RM 37,500 equal to 25% of his total capital, while Tanigai contribute RM 30,000 and 20%. Ain Hongyi and Zuhiman share 50%, indicating an equal distribution of financial input among all shareholders. Maisara contribute 10% due to the need for assistance and additional members for efficient business operation. The total of capital contribution is RM 150,000. Next, we look at capital allocation. Candle B's capital allocation document outlines a total capital of 150,000 for business setup and operating expenses. The budget includes 80,000 for buildings and land, 15,000 for equipment and RM 10,000 for transportation, RM 10,000 for cash reserve and RM 20,000 for the bank. The budget covers expenses related to finding a physical site, equipment, transportation, cash reserve and a buffer against unanticipated events. The investment in these areas ensure a fair distribution of fixed and variable costs, ensuring the company's success in the candle industry. The allocation also ensures the company maintains high quality output, uniformity, and efficiency. To conclude, Candle B has allocate RM 150,000 for capital covering various categories like land, machinery, equipment, cars, cash, and the bank funds to ensure efficient operation, product demands, and financial stability. The next part is costing method. The activity-based costing (ABC) method assigns indirect and overhead costs to production tasks in a bespoke candle pillar manufacturing process. It provides a comprehensive picture of production costs, help identify inefficiency, and aids strategy decision-making. ABC replicates modern industrial processes, enabling improved financial performance and competitive advantage, and aids in cost reduction and efficiency improvement. The manufacturing process involves 9 steps, which is the first one is preparing the mold, following by melting the wax, adding the color and fragrance, pouring the wax, cooling and setting, removing the candle, finishing, packaging, and quality control. Product costing. The table shows the direct material cost per unit of bespoke candle production at Candle B with a total cost of RM 80.25, while for the direct labor cost analysis for Candle B reveals the financial investment in human resources required for each pillar candle production, including salaries, hours work, and labor cost per unit. Next, we will look at production activity. Candle B, a bespoke pillar candle company, uses activity-based costing (ABC) to accurately allocate costs across its production activities. Key activities include equipment setup, machining, mixing, and assembly. Each activity consumes resources in different proportions, resulting in varying costs. The cost of equipment setup is 1,000, driven by 10 setup hours. Mixing involves blending bespoke and other ingredients, costing 800 and 160 per hours. Machining involves shaping and refining candle pillars, costing 1,500 and 125 per hours. Assembly involves assembly, shape pillars and packaging them, costing 500 and 167 per move. This method enhances cost management practices, optimize resources allocation, and strengthen Candle B's competitive position in market for high quality bespoke pillar candles. Candle B calculates its selling price per unit by dividing the product cost per unit by the desired profit margin per unit. With a product cost of RM 18.25 and a 250% profit margin, Candle B's selling price is 45 ringgit and 63 cents, which they round out to 50 ringgit, ensuring market competitiveness and brand value. The last part is production cost. Candle B calculates production cost for 1,000 bespoke pillar candles, calculating direct material expenses, direct labor costs, and overhead costs. The total cost is 30,029 ringgit. This analysis ensures efficiency, informs pricing strategies, and supports Candle B's commitment to quality and sustainability.
Hello and Assalamualaikum. My name is Zuliman and my metric number is 221220868. For now, I want to talk about profit planning. Profit planning includes a series of steps conducted in order to reach a specific profit level. This procedure includes the creation of a series of interconnected budgets that conclude in a master budget. Next is operating budget. The operating budget describes a company revenue generating activity, for example, self-production and finished good inventories. The outcome of the operational budget is a pro forma or budget income statement. The following supporting schedules and a planned income statement make up the operation budget. The next one is sale budget. The sale budget, which a type of operating budget, is an estimate of how many units a company expects to sell over time and how much money it expects to make. It serves as the foundation for preparing the company's income statement. Okay, for the next one is production budget. Making a production budget is the next step is creating the operational budget after creating the sale budget. The budget for production advises the business owner how many units of the product to make in order to meet demand for the product. Next, direct material purchase budget. The direct material purchase budget is directly related to the raw materials needed by the company for its production process. This budget states the amount and cost of each type of raw material needed. However, a separate direct material purchase budget must be prepared for each type of raw material. The company inventory policy helps determine the amount of raw material stored in inventory. The next one is direct labor budget. The budget hours for direct labor are determined by the relationship between labor and yield. The number of units of direct labors are determined in the production budget. Then, the total number of direct labor hours and the cost per unit can be obtained. The next one is overhead budget. The overhead budget is all that is left from production, which is not included in direct material purchase and direct labor budget. Usually, direct labor budget drives the overhead budget. Costs that vary with direct labor are called variable overhead. The next one is end finished goods inventory budget. The end finished goods inventory budget is very important because it gives the company the information needed to calculate the cost per unit of its product. This unit cost is calculated from the information collected from the direct material purchase budget, direct labor budget, and overhead budget. This budget also provides data for the balance sheet and for calculating the cost of goods sold in the income statement. The next one is selling and administrative expense budget. The non-manufacturing part of the forecast budget is sales and administrative expense. The expense has fixed and variable components. This budget helps managers to determine the amount to be spent of the non-production categories. And the last one is budget income statement. Estimation of operating income can be done by completing the budget cost of goods sold schedule and the budget selling and administrative expense budget. The budget income statement helps managers determine the expected profit for the coming year. Adjustments to the budget can be made after this budget has been complete if the budget income is not high enough. That's all. Thank you.
For make or buy decisions, we have a proposal from Yankee Candle to supply us with pillar candles at 35 ringgit per unit. Our company, Candlery, is currently analysing this offer to determine its benefits. We are considering various factors such as cost effectiveness, the quality of the candles, and how this deal aligns with our overall business strategy. On one hand, producing the candle in-house appears more cost-effective as our operating income would be 4,971 ringgit higher than if we purchased from Yankee Candle. This suggests that our internal production capabilities are efficient and provide better financial returns. In addition, we have a special order request from a customer named Amy, who is interested in purchasing 2,000 units of pillar candles at 34 ringgit each. It's crucial for us to carefully evaluate this order, taking into account profitability, production capacity, and how it fits into our current operation and strategy. Accepting Amy's order would result in an increase in operating income by 7,942 ringgit, given an additional profit margin of 3.971 per unit. We need to ensure this special order does not disrupt our existing operation and that it aligns with our long-term business goals. Therefore, a thorough assessment is necessary before making a final decision.